Welcome to the Compliance 911 Show, a no-nonsense podcast discussing hot topics for today's busy compliance professional. It's everything you wanted to know about regulatory compliance, but we're afraid to ask. And now, here are your hosts, Dean Stockford of M&M Consulting and Len Suzio of GeoData Vision.
Good morning, Len. What exciting regulatory compliance talk would you like to discuss today?
Well, Dean, a few months ago, back in November of 2025, the CFPB published a notice of proposed rulemaking regarding Section 1071. As you know, Section 1071 regulations approved under the Biden administration were quite onerous and controversial. The CFPB under the Trump administration has proposed radical changes to those Section 1071 regulations. Many of the reforms put forward by the Bureau in the November NPR have been widely welcomed by the bank and non-bank lenders alike. Indeed, the NPR includes a dramatic reduction in the number of data points to be collected. It also eliminates the phased-in multiple compliance dates for the three different tiers of lenders and replaces those dates with a single compliance date, January 1st, 2028, for all covered lenders. Those original three compliance dates made no sense because they included dates that during the initial effective year for each tier that were not at the beginning of the year. It made no sense to collect partial year data that would be worthless until all covered lenders reported complete year data. But that's what the Section 1071s required. We are recording this podcast on March 2nd, 2026. So it may be that by the time this podcast is broadcast, the final revised Section 1071 regulations will be issued. Nevertheless, I thought it would be helpful for our listeners to understand the dramatic changes in the NPR, the good and the bad, so that when the final regulation is published, our listeners can have a reference point to form an informed opinion about the final rule. So in this podcast, I want to cover what I consider to be the 3 or 4 of the most important changes in the NPR.
Len, that sounds good to me. So where do we start?
Well, first, the NPR radically reduces what lenders are covered lenders under the rule. Currently, the rule covers lenders who originated at least 100 covered small business loans in each of the 2 previous calendar years. The Bureau had estimated that would result in about 2,000 or so banks, credit unions, and commercial finance companies required to report under the rule. But the NPR changes the 100 or more loan volume threshold to 1,000 or more small business loans extended in each of the 2 previous calendar years. Not only that, but the current Section 71 rule counts loans made to all businesses with $5 million or less gross annual revenue. The NPR reduces that to $1 million or less gross annual revenue. In comparison, the current Community Reinvestment Act rule, although it mandates the collection of gross annual revenue data, does not limit the gross annual revenue to qualify for a small business loan, though it does limit the loan size to $1 million. We at GeoData Vision reviewed the activity of the Community Reinvestment Act reporting institutions during the last year that was available for the year 2024, and determined that although more than 700 lenders reported activity that year, only 80 would have generated enough small business loan volume as defined by the proposed 1071 rule to be mandated reporters. And the reported number of loans would be reduced by about 50% of the volume of loans currently reported under the Community Reinvestment Act. So it's a big change.
Wow. I mean, my quick math tells me that that's about 11%. And of course, I'm using a calculator because I'm too rusty upstairs to do it in my head. But So let's just say CRA reporters would be covered by Section 1021.
Yes, it actually may be lower than that because we reviewed only the 2024 CRA data, but covered lenders must extend at least 1,000 small business loans for each of the last 2 calendar years. It's very likely that some of the lenders we identified did not meet the threshold for 2023, thereby disqualifying them from being covered by the rule. Because of this draconian impact, we believe that the final rule may adopt a volume threshold somewhere between the current 100 loan threshold and the proposed 1,000 loan threshold. In fact, by the way, in the NPR, they do mention that they're considering thresholds of 200 and 500 loan originations per year. We also know that the Trump administration would like to propose revisions to the Dodd-Frank to eliminate Section 1071 altogether. So it may be part of their strategy to eviscerate the 1071 rule to make it completely ineffective. It sounds Machiavellian. I guess it is, but this is politics.
Yeah, okay. That adds interesting, if not a provocative, aspect to this discussion. And of course, we've talked about it at length before. But the whole purpose of the rule, enhancing transparency in the small business lending and promoting equitable access to credit with more specificity on those minority-owned or women-owned businesses. So, what other observations do you have? Because this is certainly going to create some interest for sure.
Oh, yeah. I should point out that the NPR also proposes to eliminate coverage for any merchant cash advances, agricultural loans, and any transaction of $1,000 or less.
Wow. Again, the elimination of those types of loans certainly will significantly reduce the covered lenders and the covered transactions. Wow, it's just going to be, it kind of defeats the purpose of the rule. But what other important changes to the original 1071 rule are in that actual notice of proposed rulemaking?
Well, as I mentioned at the beginning of this conversation, the Bureau has proposed eliminating most of what they call the discretionary data points. In other words, the application method, the application recipient, denial reasons, pricing, number of workers, etc. Also, LGBTQ plus references are to be removed and certain types of lenders will be dropped. In the original rule, there are 81 data points covering 18 different types of data for collection. Dozens of data fields would be removed by the proposed revised rule. It would be interesting to see how many data points survive the final rule. Keep your eye on that. My bet is that of the 81 data point fields in the current rule will be reduced to around 20 fields or so, which will be a great relief to any of the covered institutions who will be reporting under the regulation.
Yeah, like right back to what I was just referring to. But will that make the rule act essentially ineffective, when?
Well, I don't think the reduction in data points will affect the value of the data nearly as much as the reduction in the number of covered lenders and the change in the definition of a small business loan from $5 million or less gross annual revenue to $1 million or less gross annual revenue. The Bureau actually stated in the NPR that it believes an, quote, incremental approach is appropriate. And therefore, the relief provided by the removal of most of the discretionary data points may be temporary. For sure, if a Democrat wins the presidency in 2028, you can be sure that many of the data points proposed to be removed will be restored.
Yeah, that's always the big conundrum that we face for sure. But what other big changes in your opinion are in that NPR?
Well, in my opinion, the change of the definition of a small business from a gross annual revenue of $5 million or less to $1 million or less will make the Section 1071 definition so similar to the CRA definition, it will significantly increase the likelihood of reporting errors. The CRA definition limits loan size to $1 million, but does not limit the gross annual revenue of the borrower. On the other hand, the proposed Section 1071 definition would limit the size of the borrower to $1 million or less gross annual revenue, but with no limits on the size of the loan. The definitions are very similar, but also simultaneously very different. You can see how easily it would be for many, many people to confuse one definition with the other. And I project this will cause not only a lot of confusion, but a lot of reporting mistakes.
Sometimes I think lawmakers do this on purpose, but do you have any suggestions to address the potential confusion?
Yes, it's been more than 30 years since the size limit of a small business loan has been changed in the Community Reinvestment Act. Consequently, inflation has made the 1995 $1 million loan and gross annual revenue limit more like $2.5 million in 2026. I would suggest that the CRA definition be amended to increase loan size to $2.5 million and distinguish the gross annual revenue at the same amount. I would also recommend that the Bureau adopt the same definition for Section 1071 purposes. A consistent definition of a small business loan will reduce potential confusion and potential reporting errors.
Well, you've certainly presented some food for thought today, and I think you've given our listeners some points to consider when they read the final Section 1071 rules. So Well done, and appreciate all of the insight, Len, for sure. This is Dean Stockford with M&M Consulting.
And this is Len Suzio of Geodata Vision saying, we hope you found today's presentation provocative and useful. Please let us know of any topics you would like us to address in future podcasts.
Thanks for listening to the Compliance 911 Show. If you like the podcast, be sure to subscribe so you don't miss an episode. While you're at it, please give us a like and review to help others find the show. As always, links are in the show notes, and you can always find us online at compliance911show.com. Follow M&M Consulting and Geodata Vision on LinkedIn for all the latest news and information on compliance hot topics.